Thursday, before market close, I placed 6 earnings trades: ExxonMobil, Chevron, Baba, AbbVie, Colgate and Palmolive, and AIG. The options strategy I used for these trades was the Iron Fly, expiring November 1st. I always go for the closest expiration because I simply just want to take advantage of the premium's value going down after earnings announcement and the stock not moving as much as expected. So I basically sell the put and call option at the strike where the stock is currently trading at, and then I buy for protection the call and put option a few points away from the current market price. So for example, if we look at Chevron, when it was trading at 116, I sold the put and call option at 116, sell to open, and I bought the 119 call option, buy to open, and I bought the 113 put option, buy to open, for protection, and they were both 3 points away from the shorted strike. For placing this trade, I collected $1.83. My risk, or the most I can lose, is the difference between the short put or call and the long put or call, minus the credit I collected for placing this trade. So short means selling with the intention to buy lower, and long means buying with intention to sell higher. You can see the difference between the long and short strikes is $3. So my max loss on this trade is $3 minus the premium collected of $1.83. So my max loss is $1.17. Now, how can I make money with this trade? So if Chevron after earnings announcement trades at 116 at expiration, which was 4 o'clock Friday, I can close this trade for nothing. So I would keep the full $1.83 minus commissions of $7.95. Obviously, this is $1.83 per contract. Since a contract is 100 shares, then I'm talking about $183 minus commissions of $7.95. If Chevron is trading, for example, at 114 or 118 at 4 o'clock or come expiration, I would have to close the trade for $2, therefore losing money on this trade, 17 cents. $2 minus $1.83 is where I would get the 17 cents loss. If Chevron is trading anywhere above $119 or anywhere below $113, I would have to close the trade for $3 regardless, making my loss $1.17 or $117, which comes from $3 minus $1.83. Now, in reality, I ended up closing the trade the next day for $1.46. So I made a small profit on this trade because I sold it for $1.83, closed it for $1.46. But I had 5 other earnings trades, and here's how they turned out. So ExxonMobil, I sold for $1.20, but I ended up closing it for $1.25. So I actually lost money on this trade. Baba, I collected $390 on this trade to open, and I ended up closing it for $246. So I actually made money on this trade, about $150. AbbVie, I collected $190, but I ended up closing it for $147. So made a small profit there as well. Colgate and Palmolive, collected $157, ended up closing it for $150. And finally, AIG, collected $195, but ended up closing it for $120, so making a small profit there as well. I probably could have closed these trades for less if I were patient, if I had waited till the last few minutes of the day, but I never know what's going to happen. So if I can secure a profit or limit my loss, I'll close it as soon as I can and hope that the combined trades end up profitable. For the month of October, in earning trades alone, I made a combined profit of $795. So some were winners, some were losers, but the cumulative result was a profit. So going back to these 6 trades that I placed on Thursday and closed on Friday. So if you look at ExxonMobil, my short strike was 67.5. Now, if I had waited till 4 p.m. or 3:50, for example, to close this trade at the last second, I would have had to pay $2. So I would have closed it for max loss. But in reality, I closed it for $1.25. So I only lost $5. So this is an example where closing it early was a benefit to me because instead of losing max loss of $75 or $80, I only lost $5. In the example of Chevron, I collected $183, but I ended up closing it for $151. But if I had waited till the last minute of the day, Chevron closed at 116.21. My short strikes were 116. So I could have closed this trade for about $25. So I sold it for 183. I could have closed it for $25 instead of closing it for $151. So I would have made a much bigger profit in the case of Chevron. Now let's look at Baba. Collected $390. My short strikes were 177.5. Baba ended up closing the day at 176.46. So I could have closed this trade for about $100. Instead, I closed it for $246. So I could have made an extra profit of $150 on Baba. In the case of AppV, I ended up closing it for $147. But if I had waited till the end of the day, I would have closed it for $275. So this was a good example. So it's a good thing I closed it early. In the case of Colgate and Palmolive, I ended up closing it for $150. If I had waited till the end of the day, my short strikes were 68.5. I would have closed it for about $170. So once again, it was a good thing I closed it earlier. And finally, in the case of AIG, I closed it for $120. If I had waited till the end of the day, I would have closed it for $76. So definitely would have made more of a profit on AIG. So as you can see, some of these trades would have been more profitable if I waited till the end of the day, but some of them I would have lost more if I had kept it till the end of the day. So in the case of these 6 trades, I would have been better off waiting till the end of the day, but that might not always be the case. So that's why I prefer to just close as soon as I can, take whatever profit I can get, and limit the losses on the losing trades if I can. If the day starts off with the trade being already at max loss, I'm not going to close it early. I'm going to give it a chance to maybe come back. If I'm already near max loss anyways, there's no benefit to closing it early. I'll try to give it a chance till the end of the day because it will most likely move and maybe it'll move closer to my strike. And in this example, earnings were being released Friday before market open and the expiration was Friday. But in other cases, earnings could be on Monday and expiration is on Friday. So I might close it on the same day or I can wait till the end of the week to close it, depending on how the stock moves. So on these 6 trades, these 6 earnings trades, ended up making a profit of $295. But after commissions, net profit is $200. So yes, I spent about $95 in commissions because these options trades have 4 legs. And with Questrade, an options trade is $5 to open plus 75 cents a leg. So if it's 4 legs, it's going to cost me $8 to open the trade and another $8 to close the trade. So each of these trades to open and close cost me $16. I had 16 trades, so that's $96 in commissions. Now, I do have the option to move to Interactive Brokers, where I probably could have saved $60 combined on these 6 trades. Because with Interactive Brokers, I don't have that initial $5 that Questrade has to open or close a trade, but I do have the 75 cents per leg or per contract like Questrade. And sometimes with Interactive Brokers, it can reach $1 per contract. So Questrade is actually better in terms of contract price, but because they have that initial $5 to open or close a trade, that's where the difference comes from. If I open a trade that has a lot of contracts, that initial $5 can get diluted. So because I'm still trading small, I only have 4 contracts per trade that I open. So that $5 gets diluted by 4 contracts. So I'm basically adding $1.25 per contract to the 75 cents that they charge. So it's like $2 per contract. But let's say I had 3 contracts or 3 lots of 4 contracts. That would be 12 contracts in total. So that $5 would get diluted by 12 contracts. It ends up being only 41 cents extra to the 75 cents. And in that case, it becomes very close to Interactive Brokers pricing. But the main reason I am sticking with Questrade is because Questrade offers extra buying power or leverage, which I can use to place trades and make money. So Questrade calls it margin power. Basically, you have the power to increase your buying strength. It's called margin power, and it's an exclusive to Questrade. Margin power connects the savings in your TFSA with the trading in your margin account. What you get is the opportunity to enter new positions in your margin account. If I were with Interactive Brokers, I would actually not have enough buying power to make these 6 trades that ended up generating me $200. It is still hard to ignore the commission difference. This is why every now and then I will contact Questrade customer service and try to negotiate the commissions. I was never successful at it, but I will keep trying. All right, so if you have any questions about the earnings trades I placed or the option strategy used, leave them in the comment section below. Like always, if you're going to trade on the stock market using Questrade, use my referral code in the description below the video to get up to $250 back. Thanks for watching.